Trade Genius.
What's up guys, Philip at Trade Genius. Alright, in this video what I want to cover is something that is very important when you're trading, and I don't care if it's cryptos or stocks or binary options. You need to know what your trade expectancy is. So what we're going to do is we're going to dive into the formula for trade expectancy and show you how you can apply it to your own trading and make sure that the trades you're entering are going to be profitable. And if not, then you got to adjust your system and take a look. So let's check out how this works. All right, so what is trade expectancy? Well, it's a formula and it goes like this. Expectancy equals the probability of a win times your average win minus the probability of a loss times your average loss. So when you're trading your setups, what percentage of the time do you win? And then what's your average winner minus what percentage of the time do you lose, and times your average loss. So I know that looks like a bunch of googly gawk formula stuff, so I'm going to show you a couple of examples of how that breaks down. Now, the example we have here is like our typical binary option Forex signal service. And so this is what our, we do about 96%. And so when we win 96% of the time, what we're doing is deep in the money trade. So 96% of the time we capture $17. So what you're going to do is you're going to do your probability, so your percentage of the actual capture of $17. So 96% of $17 equals $16.32. Now you subtract that by the amount of times that you lose. So we lose 4% of the time. Now because the structure of these trades is a little deep in the money, the losers are actually higher, a lot higher than the winners. But we only lose 4% of the time. It's built into the system. So that means that we actually lose $2.20 on those per loss. So the expectancy would be then $16.32 minus $2.20. So every time we enter a Forex trade in our high probability system, we expect to make $14.12 per contract per trade. All right, so then at that point, you don't even have to think whether or not the trade that you're entering is going to win or lose. You just know that the system has a positive expectancy. So you're going to enter that. Now it's just a matter of how many contracts do you want to trade relative to your account size and proper capitalization. Now I'm going to show you a different way to look at this in percentage terms so that you can apply, this is for binary options, but we can apply it to anything, crypto or swing trades on stocks. So I'm going to show you another example of that next. But guys, if you're interested in this system, this high probability binary option system, just head over to tradelikeagenius.com. Our fall specials are ending tonight at midnight, so we got about 15 plus hours left, and that's it. September 30th at midnight, they go away. Binaries you can get in special number 1, also in special number 3. And we also have ETFs and stocks, signals. We have our training bundles, and there's a lot of tools and information here. The signal services will easily pay for themselves as far as the investment back on the rate of return on those. They're very high probability. So again, guys, going away tonight at midnight. Check it out. We got about 15 hours and 40 minutes left here Sunday morning. All right, so let's look at the example number 2. Okay, so the next one, guys, that we want to talk about is how do we look at it as a percentage. So let's just say your swing trade, and I don't care if it's crypto, stocks, ETFs, what have you, a little different than the binary options because we're not dealing with specific contract prices per lot. But if this is looking at percentage terms, so let's just say you have a swing trade setup using our signals and you perform at 65%. And 65% of the time you win, and you win about 15% on return on your trade. So 65% of 15% is 9.75%. Okay, that's your winners. Now, you lose 35% of the time, and those losers are about a 5% loss on average. So 35% of 5% is 1.75%. So again, it's the same formula, you're just using percentage terms. 9.75% minus 1.75%. So that gives you an expectancy of 8% per trade on that particular swing trade setup. So whenever you're starting out on a new system or a new signal, this is why logging is important. And if you sign up on any of our stuff, I will throw in an Excel log sheet that you can use to log your stuff. And basically, so this is going to show you what your expectancy is on your trades, and it has to stay positive for you to be a successful trader. If for whatever reason, as you're logging your trades, your expectancy goes negative, you have to stop and reevaluate your system, because something's changed and it's just not working the way it should. If more people looked at their expectancy rate of the system that they're trading, there'd be a lot more successful traders, but a lot of people don't. The other thing to keep in mind is this also shows you that the amount of wins and losses is only part of the story. You can have a winning record. You could have, say 8 wins and 2 losses, but if your losers are just way bigger than your winners, and that actually could make you a negative expectancy rate. And vice versa, you could win 35% of the time, have 65% of the losers, but your setup is that you're winning home runs, and so your winners on average are far greater than your losers on average, and you still have a positive expectancy, even though you might have a 35% win rate on that system. So wins and losses, it's easy to talk about that because people relate to that, but that's really not the whole story. It has to be a positive expectancy type system. So guys, I hope that helps. Again, a lot of people don't grasp this concept, but rewatch the video if you need to go back over those formulas and jot them down and use them in your own trading logs, or use your logs to figure out if your system's working or not. And when you do that, it helps take the psychology part, the fear part out of the entry of the trade, because you know your setup is set up to do a positive return. And if it doesn't, then you know that you got to reevaluate your system, because you just want to be a robot when you enter those trades. You don't want to second guess yourself, and this helps you get to that level. So anyway, I hope that helps, guys. Please hit like and subscribe, and ring that bell if you're on the mobile. And tomorrow's video, we're going to wrap up the weekly outlook and look at the month end and see how the monthly candles closed, as well as weekly and our daily outlooks going forward in the week. So all right, guys, thanks for watching. Take care. See you on tomorrow's video.
Trade Genius.